We're doing a rental market update because we're in, the first third of the year is over. We need to take a look at how the rental numbers are doing. We like to tell our investors how rents are going, how's Calgary compared to the rest of the country. And if you can see this chart here, it's from rentals.ca. Um, Calgary's average rental rate has actually dropped 4.2%. Now, you can see the other big cities in the country have dropped as well. Vancouver's down 3.8, Toronto's down 4.8. But if you look at the total rental amount, Calgary is almost $1,000 below Vancouver. We're about $500 below Toronto. And that's a sizable amount of money for
Mhm.
tenants out there.
Well, it's huge because if they're earning the same money in Toronto, they can earn that money here in Calgary. Not only that, they have more taxes out there. They pay for everything more. So, properties, rent, food, everything, even gas. When you turn on the news every night, it shows you where the cheapest gas is in the whole country, and it always seems to be Calgary. I have an electric car, so that doesn't really matter. But at the end of the day, Calgary is looking great. What's going on with the minus 4.2%? We can tell you there is a massive oversupply of condo units in Calgary, and that is going to continue. There is expected 18,000 units coming on board this year and next year. So that alone is going to keep rents down. And that's what the feds wanted. They wanted affordable housing. It's already brought prices down in new communities, and it's bringing, or prices will stay down in condos in the downtown market. So you really have to be selective if you are getting a condo. We always say this. You have to be in cool areas. Like, where are the cool areas? Like Lower Mount Royal, Bridgeland. You got Kensington, Mission's really cool. And then you got Martin Loop, your neck of the woods. And then you know what? We were up in, we were filming a video that Carly got us to film in West Springs, and I was just telling the guys how cool it is up there. And guess what? They've got a supply issue up in West Springs. They got like three more. I think Alex said they got four more high-rise buildings coming on board. So that's just going to keep that market flooded for some time. And then you hop over to Aspen, and I'm only picking on the west side because I live up there. But Aspen's got the same thing. You got four more or five more buildings, not like small buildings. We're talking like 12-story buildings coming on board, which is going to flood the market for some time.
Yeah, and looking at these numbers, for every city, it's the asking rental average. So what that means is this site is actually looking at all the rental sites out there, and they're figuring out the average asking rent. So that 2008 as a Canadian average, that's for the asking rent. It's really hard to determine the actual rent that people get because we don't publish it. Once you get your property rented, you may have negotiated with the tenant for $50 off or whatever. That never gets reported. But the asking rent is a pretty good idea of where those rental rates are going to be. You can see with this second chart here that that asking rent's been falling for basically 2 years now, since March 2024. And we anticipate that to happen a little bit more because of the inventory coming online. And it's not just the west side, like Azad was talking about. You can drive anywhere around the city, the smaller towns around the city. We were in Cochrane earlier or later last year. There's tons of buildings going up in Cochrane.
Yeah.
Okotoks is the same. Chestermere, that corridor between the eastern city limits on 17th Ave and Chestermere, there's tens of buildings going up there.
Yeah.
Like purpose-built rentals, sales, it's all around the city because of these government incentives. So that's going to drive that rental rate down. And that's what the governments wanted. They wanted to make home living more affordable. So by flooding the market with rental properties, guess what? That's going to drive the rental rate down, and it's going to make it more affordable for the average renter out there.
Yeah, so if you are a landlord out there, take note. That is a key point to make sure when you're running your numbers, you run them at worst case scenarios. You pick the cheapest rents in a community if you're going to invest in that community, and you run with those numbers, just so there is no surprises.
Yeah, and this chart just reflects the percentage decreases. I won't say increases because we've been decreasing for 2 years now. At 5.3%, that's not a huge decrease percentage-wise, but that may push some marginal landlords into a negative cash flow position, and they may have to get out of the market. So keep an eye on what your rental rates are and what your expenses are. We'll get into this in the seminar in a lot of great detail, but you got to make sure that you maintain at least a neutral cash flow position and stay out of the negative to be a successful landlord out there.